a lot of y'all are, at least all the July 1s are kind of getting down the road on budget adoption, tax rate adoption. So kind of wanted to hit some of the high points here. There's a whole lot in this presentation. I'm gonna, just in the interest of time, I'm gonna sort of move through it really, really quickly. But you guys have it, it's on the Rejoin website. You guys can call if you have any questions. Okay, I'm gonna move through this. You guys, we already did our vocab lesson for the day. Here's your tier 1 rate. It has 2 tiers, and within tier 2 has 2 levels. I talk about tax compression here. Moving on, tier 2. We know tier 2 level 1 is golden pennies. You got 8 of those, up to 8 of those. Tier 2 level 2 is also called copper pennies. You have up to 9 of those. Copper pennies can get compressed if the basic allotment goes up. INS rate. So districts obviously adopt an INS rate to service debt. The INS taxes are not used to directly pay for construction costs. This is stuff you guys are all well aware of. You should work with your financial advisor to settle on an INS rate that you think is appropriate for the next budget year. That's going to vary depending on your values, depending on your debt service requirements, and so your financial advisor is really the person best positioned to assist you with that. If you need help, Moat Casey can also help, but you know, we're not licensed financial advisors. So if you screw it up, you can't get mad at us. No, I'm just messing with. But we know obviously school finance. We know how INS state aid works, so we can absolutely help you with that. But you should have a licensed financial advisor in your corner helping you out with this as well. So voter approval is not required for setting or changing the INS rate. That almost changed this session, but that bill didn't pass. And so voter approval is required to approve the bond, right? Once the voters approve the bond and you issue the bond, the district can adopt any INS rate they want, with some exceptions, to service that debt. Okay, so you are kind of in charge of the INS rate. The voters get to say on whether or not you issue the bond. You can't issue new debt if the Attorney General believes that that's going to cause your INS rate to go above 50 cents. There are districts out there with the INS rate above 50 cents. The way they got there is either they misprojected it, or maybe their values went down, right? They thought their values were going to go up, I don't know, 2-3% each year, whatever their financial advisor forecasted. Maybe that didn't turn out to be true. Maybe they had minerals in their district or whatever. You know, oil values there kind of threw things off, or for whatever reason, your INS rate can go above 50 cents. You just can't issue a new debt if that's going to push your INS rate above 50 cents. There is some state aid to equalize INS revenues, but it's pretty pitiful, to be honest. It's been flat for decades, and fewer districts are qualifying for that. And so just the share of INS funding that comes from locals versus state is it's pretty lopsided right now. Okay, I'm going to do a plug here for this TASB document. Usually I like to just, you know, have you come to Moat Casey for all your needs, but TASB, I just want to give them props for this. It's this school district budget and tax rate adoption guide. It's very, very well put together. This is kind of like Christmas at Moat Casey. When this document comes out, we print it out, share it, compare notes, you know, give each other high fives, I don't know, do a dance. But this is something that you guys should have on your desk during budget and tax rate adoption season. Okay, we have the high level budget or tax rate adoption timeline here. Obviously, there's some details that are different between July 1 and September 1 districts. July 1 districts have to adopt their budget by June 30. September 1 have to adopt their budget by August 31. Backing up a little bit, you have to publish in the paper 10 to 30 days before that budget meeting. The form that the controller puts out for that meeting notice, I'll show that here in a minute. Once that notice is published, the district must post a summary of the proposed budget on its website. So make sure you're in compliance and ready to go with that. There's some rules about the circulation of the newspaper. It's got to be in your district, as long as you're using this specific notice, you'll be okay. But there's rules about the size of the font and all that stuff. So make sure your newspaper doesn't shrink down your notice into something that folks can't find. 72 hours before the budget meeting, you got to do your normal Open Meetings Act notice. This is a relatively new requirement. I think within the past, I don't know, 3 to 4 years, those controller worksheets for the no new revenue rate and voter approval tax rate, you have to append those to your budget once you adopt it. So if you're July 1, you're going to adopt your budget and then do this afterwards. If you are a September 1, you may adopt your budget in mid-August, let's say, and so you should have these controller worksheets ready to go by then, and so you can just throw those on the end of your budget whenever those are ready. Yes. Yeah, I think I got a slide. Did I bring that in here? Yeah, so when we talk about the no new revenue rate, actually, yeah, it is later on. The no new revenue rate plays a role this year that it's not going to play next year. And so I'll talk about that here in a minute, but you'll still, I don't think the controller is going to take off the no new revenue rate. You may need to report it, but it's not going to play a role next year. It's not going to play the same role next year. Okay, so you have that worksheet you got to put on your budget. It says, again, August 7th or as soon as practicable. The only thing that happens if it's after August 7th is your CAD sends you a little frustrated email, but that's kind of a soft deadline in statute. For tax rate adoption, all districts, doesn't matter if you're July 1 or September 1, you have until September 30th or 60 days after receiving your certified values. And so it's this sooner of either of those things. So if you get your values really late, then that pushes your tax rate adoption deadline beyond September 30th. If you are going to adopt like September 29th, let your assessor collector know, because sometimes they get a little grouchy if you're adopting your rate really late. If House Bill 1 passes, then they're just going to have to deal with it, because nobody's going to know what your rate is until November 7th. But this is, you do have in statute until September 30th normally to adopt your tax rate. But again, if you're going to wait that long, usually folks do it in August. If you're going to wait till September, let your assessor collector know. Okay. Just as there's different versions of your property values that we walked through and how to calculate those and assemble those for your note or for your template, there's also different tax rates that are important for the tax rate adoption process. Have the proposed tax rate. This one's simple enough. It's the rate you are proposing to adopt. The only wrinkle here is for July 1s, it's a placeholder, right? And I think I lectured y'all enough on that. You guys are aware of what that means. Since you don't have your local compression, you don't know your July certified values, you don't know exactly what your adopted rate will be. But for July 1s, you're going to put in a placeholder because you got to get a notice in the paper before you adopt your budget. Okay, so September 1s, you're going to have a little bit more firmer of a rate than July 1s. All right, no new revenue rate. There is an M&O and an INS no new revenue rate. The main role that this plays now is it determines when a supermajority vote is required of your board. So to adopt the rate, if your proposed M&O rate exceeds your M&O no new revenue rate, then you have to have a supermajority, 60%. It also determines when certain language has to go on your notice on your website, that kind of thing. We'll talk about that more here in a little bit. Voter approval tax rate, this is the rate that triggers an election. So if our friend back here, he has 13.83 cents, tier 2 pennies, if he adopts a rate that has the full 17 cents, your proposed rate would be higher than your voter approval tax rate, right? Your voter approval tax rate would be tier 1 plus 13.83. That's your voter approval tax rate. Your proposed rate would be tier 1 plus 17, right? So your proposed would be higher than your voter approval tax rate. You adopt that proposed, and that's what triggers an election. Okay, then we also have the rate to maintain. This is the most nebulous of the tax rates here because there's no form no official sort of state form to fill this out. The Region 13 template does include a tab to do this. Moat Casey, we do it a slightly different way than what's in the Region 13 template because if you go look in Chapter 44 of the Education Code where rate to maintain is defined, it says for M&O purposes, it is the M&O rate that maintains your funding, your per student funding under Chapter 48, right? So it's the M&O rate that keeps your M&O funding per student flat from last year, okay? If you use Omar's template to do that, and you take that M&O rate that comes out from that process, it's not going to keep your M&O revenues flat per student. So 90% of districts don't really comply with, they just take whatever the Region 13 template spits out for them and just throw it in the paper and nobody seems to care. And so, choose your own adventure there. But if you want to calculate it as we understand it under Chapter 44, then we have a process to do that. I'm not going to go into that full process right now, but we can do that at the summer conference later because it's not quite as simple as the way Omar spells it out in the Region 13 template. So that's M&O rate to maintain. The INS rate to maintain is just the rate needed to service debt. So if you're going to do defeasance, the INS rate that you're going to propose is your INS rate to maintain. Okay, that is what you want to do for debt service. That's why if anyone is going to do defeasance, we recommend your board adopts a defeasance resolution because that is your board sort of acknowledging this is our debt service for the year, right? And so that is what sort of, in our opinion and in other groups' opinion, that is what allows you to set your INS rate above what's needed for the rate to maintain and for other purposes as well. So if you're going to do defeasance, make sure to have a defeasance resolution. Your friendly neighborhood financial advisor should be able to provide that for you. We have some boilerplate stuff if you want to use that as well. Let me know. Okay, so that's rate to maintain. Okay, proposed tax rate. Again, this is just rehashing the lecture I have given y'all already. For July 1s, you use the lesser of the prior tier 1 rate or the state compression ceiling, right? Last year when you were doing this, there wasn't, if you were, let's say you were at the floor, you had a tier 1 rate of 80.46, or that would have been 82.20. The ceiling wasn't going to come down, it wasn't going to touch you, right? So you would have just used 82.20 for your proposed rate if you're July 1 last year. This year, though, the ceiling is crashing down on us, right, because of the budget, right? So the lowest you can be is 80.46. The ceiling right now is 89.41. It's coming all the way down to 79.50, right? So it's going to move everybody down to 79.50, even those that are at 80.46, okay, which is the floor this year. So, and that's what I'm saying right here. Because of the 88, everyone should use all the July 1s should use 79.50 as their tier 1 rate. And then of course you add your tier 2 pennies on top of that. Just for purposes of your notice, again, do not adopt a rate using 79.50 unless TEA tells you to. September 1, you're going to get your stuff from TEA. And so go through that local property value survey process, use that calculation, and take that tier 1 rate you get from TEA as the basis upon which to build your proposed M&O rate that you want to adopt. Yes.
In our district, we're September 1 district, and right now our compressed tax rate is 8046.
Yeah.
But we do have some budget workshops with the board that we start presenting. So do we use the 7950 right now, or would this TEA have some information regarding?
Yeah. So
Do we start using for
you
right now?
have your April estimate, right? You can go through the process I just went through to figure out what your compression is going to be, right? Plug all that into your template. It kind of depends on how much you trust your board, right? If you think your board can understand a part of what I've gone through, then you can say, here's what we think our rate's going to be, right? We think it's going to be 75, or let's say the tier 1 rate 75 cents, right? You plug in your April estimate, it's not going to be 79.50. We think it's going to be compressed down to 75 cents. You can say to your board, we think compression's going to do X, okay? However, this is the April estimate. April estimates are often wrong, right? We're going to get the official numbers in July, okay? If you're comfortable with going to your board and explaining that, then I would say do that. Then the next step would be, because we don't know what's going to happen in July, right? We don't know what our July certified values are going to be. We're not going to put something out to the public, right? That's wrong and potentially going to make us have to pay to redo a notice, right? If you guess what your local compression is and you overshoot it, right? And you're wrong, and it's too low, right? Yeah, thank you. And you have to adopt something higher than that, then you have to repost your notice, right? And so that costs you money, and you got to worry about the timing and everything. And so for that reason, that's why we ignore local compression for July 1. And so what I would say to the board is the July values are not out yet. So we're just doing what the state, sort of what we know now. We know state compression now. So that's what we're going to build into our budget or into our notice. However, we have this estimate, the April estimate, right? And we can kind of guess at what our compression is going to be, but we're not going to put that on anything official because it's not official yet. Say that again? The notice has to run in the paper. Yeah. Yeah, the notice has to be published in the newspaper. Well, you have to do it if you're July 1, right? Did you say you're July 1? No, you're September 1. Oh, okay. Okay. Well, I'm sorry. I didn't mean to do all that over again for you. Yeah. Okay. Then, yeah, I would say yes. So scratch all the July 1 stuff. Sorry. Then, yeah, you could say, here's what our compression is based on our April estimate. We're going to get this revised in July. We're going to get the official number from TEA August 11th, I think, or mid-August. And that's when we'll know what our tax rate is officially. Okay. And then you'll be able to well, hopefully you run your notice. You may be able to include that information in your notice because you'll have submitted your values to TEA in late July. So hopefully you should know what your tier 1 rate is by that point. Yeah. Yeah. Yeah, so the question was, you're July, you post, and then Governor Abbott in, I don't know, August or September, um, decides to be generous and he increases the basic allotment in a special session, right? As I just went on at length earlier, that's going to trigger copper penny compression. And then potentially you're adopting a rate that is, well, that would be lower, right? That would push your rate lower. Am I understanding you correctly in this scenario? You can always adopt a rate lower than what you post. Sorry, that light bulb didn't go off until just now. If you adopt a rate that's lower than what you post, then you don't have to go through the republication process again, right? Because that's gonna, the basic allotment increase is gonna compress your copper pennies, lower the rate that you likely posted. And the rate you adopt will be lower. Yes, yeah. Okay, here's where to do that again in your template. I showed you that in the previous presentation. All right, so proposed rate, you guys, we already talked about this, start with your, for tier 2 purposes, you start with your tier 2 pennies that you had last year. Okay. First question, did the legislature increase basic allotment? Currently, the answer is no, so move on. Next question, is the district looking to increase the number of pennies through an election or use of disaster pennies? For most of y'all, that's going to be no. Okay, if 2 and 3 are no, then your tier 2 pennies from the prior year are going to be your tier 2 pennies in the following year. Okay, no new revenue rate. This is misnamed. It is not the rate that maintains your revenue, as that would indicate. The no new revenue rate is defined in statute as essentially the rate that answers that big bold question right there. What would the tax rate need to be to raise the same levy as last year on the same properties that you had last year on the rolls? Okay, so all the businesses and homes and everything you had on the tax roll last year, if you just bring in those over to the next year, what is the tax rate that would bring in the same local collections? Okay. This no new revenue rate, if you adopted it, would almost always result in a revenue decline, right? Because your revenue triggers state aid, right, in tier 2. Usually your no new revenue rate is less than your M&O rate. And so if you adopted it, you're giving up tier 2 pennies, right? You're giving up golden pennies, giving up copper pennies. You'd lose money if you adopted this. So this should really be called the no new local tax collection rate in certain circumstances that are totally hypothetical and not grounded in reality at all. That would be my proposal. But at any rate, that's what it's called. And that's what you will have to calculate. Or really your CADs, and I think your tax office helps most of y'all with this. So again, it does not answer what happens to school aid, state aid, if that rate was adopted. There's a very handy dandy worksheet that the controller puts out on calculating these things. This is the part I'm going to speed through very quickly, just in the interest of time. There's 2 different versions, one for folks with 313s, one for folks without 313s. Again, I'm going to go through this very quickly. I just want to note this form has not been updated by the controller's office. And so all the years on here that you see are going to be lagged, right? So this will read 22 taxable value whenever that comes out. Usually, I think in August is when they come out with this. So again, I'm just going to move through this. You guys can, again, for most of y'all, your tax office helps you with this. You can review it later on after the presentation. I show you where to find all those things. And if you have questions, you can reach out to me afterwards. So you're going to go through the no new revenue rate, find all this stuff. Okay, so then you arrive at line 25, and you get no new revenue rate, and the question is, now what? What does this mean? And here's what it means. If your proposed rate is greater than your no new revenue rate, so that's total proposed greater than total no new revenue rate, then you have to have this specific language in your motion, okay? And that is here, okay? This is your proposed rate. This is the percentage difference between proposed and no new revenue rate, okay? All right. And this is that whole thing I would talk about earlier. Effectively means the levy is going up on properties taxed in both years, right? So that means, and really that just means your values are going up, right? You had a homestead one year, a homestead another year, the value went up. Even if your tax rate stayed the same, effectively that homeowner is paying more taxes, right? Because their values went up. And in this example, your tax rate stayed the same. If your tax rate is compressed, it may not be compressed enough to offset the value increases, okay? So you may still have a no new revenue rate that is less than your proposed rate once you go through all those calculations, okay? So you almost always, you're gonna have this language for your motion. You also have to have a supermajority vote. That's what this graphic is indicating. If your M&O, your proposed M&O rate is greater than your no new revenue M&O rate. So again, this is not the total no new revenue rate. It's just the M&O portion of that rate. So if proposed M&O is greater than no new revenue M&O, then you have to have 60% approval of your board. And so for most folks, if you have a 7-member board, that means 5 members have to be voting in favor of it. This is important. Round Rock got sued for exactly this. They had a board member step out of the room when they took the vote. And so they didn't have 60% and they had to deal with the taxpayer lawsuit as a result. And I'm actually not sure how it all shook out, but they called us and was hoping there was some sort of loophole or something in statute, and we couldn't find one. And so I think I'm not exactly sure how they resolved that, but it was a several year-long headache that they had to deal with, and maybe even still be dealing with. I'm not sure. But this is important. Make sure that you are aware of what your no new revenue M&O rate is, and if that applies, make sure you get supermajority approval of your tax rate. Okay, if the tax levy is increasing over the prior year, then you have to have specific language in your resolution and on the website. It's identical, largely identical. It just has a district name here, but it's this all caps thing that goes again in your resolution and on your website. I've seen some people just put it on the homepage at the very bottom. I don't think there's a particular part where it has to go. Some districts have like a required posting corner of their website that's where they stick it. I think either is acceptable. So if the levy is increasing and the proposed M&O rate is greater than the no new M&O rate, so both of those things are true, then you have to have additional language on your resolution and on your site. So we had this already. If the levy is going up, then if the no new revenue rate stuff is applicable, then you got to add this part. And this sentence drives people crazy every year. Nobody understands it. And really, it's not written in a way for anybody to understand because it's written by people that don't understand how property taxes work. And so what this says, this crazy sentence, is the tax rate will effectively be raised. My tax rate's going up, right? If I'm a taxpayer, that's what I read. And we'll raise taxes for M&O on a $100,000 home by what? -37, but I'm going up. Why is that? The reason is, in this calculation, you're acknowledging that values are going up, right? Values go up every year, right? So that's what's driving this number. In this second half of the sentence, this is a fictional home that's $100,000 each year, right? So it's $100,000. This district had tax compression, okay? So if you take $100,000 each year and you have a lower tax rate, then of course it's going to be a lower levy. But they have this crazy Frankenstein sentence that's mashing things together. and it doesn't make any sense for people. And so that's what we get. This is the required statement to help illuminate things for truth and taxation purposes. And so, but that's why we get this discrepancy between, and this is very, very common. You have a positive number here or a tax increase compared to a negative number here for the levy comparison. So have fun explaining that one to your board. Okay, we talked about this already, so I'm going to move quickly through here. HB 4456 is going to, what this does is it sort of, all the stuff I talked about, no new revenue, M&O rate, it replaces it with the M&O rate to maintain. Okay, so I mentioned that there's no official way to calculate the rate to maintain. I think this is going to be a problem because essentially the whole state hinges on a template that a retired TEA official puts together. And the controller doesn't have a way to do rate to maintain. TEA doesn't help you do rate to maintain. It's all essentially, again, 90% of districts use the Region 13 template, which, again, we have some methodological quibbles with. But half the time they put in some wonky data that's maybe not even using that template correctly. This is, I think this is going to be a problem when this comes online. I hope districts don't get challenged by their taxpayers on how they calculated this, because if people start digging into how folks are doing this M&O rate to maintain, I think it could get messy. And so, but this rate is going to be the thing that drives a supermajority requirement. Okay. And then, as Amy mentioned earlier, it aligns the tax code definition of rate to maintain with the education code definition. Tax code references weighted average daily attendance WADA. Education code referenced ADA, and so this sort of corrects that. But as I note here, this is not a this year problem. This is a next summer problem, and so I'll be down here next year and walking y'all through that at that time. Senate Bill 1997. This is that worksheet that I showed you earlier here with the voter approval tax rate, no new revenue tax rate. All of these things that your CAD fills out, right? All of these are going to have to have a hyperlink to take them to the source data. Okay, that's what 1997 does. Same thing for voter approval tax rate, right? So your CAD is probably going to ask you, or your tax office, whoever helps you with that worksheet, is going to ask you, okay, we need some backup, we need screenshots, we need additional stuff to provide to the public in this database that's required here. All right, the voter approval tax rate, as I mentioned earlier, this is the rate that triggers an election. There's also that's also done on this handy dandy form that the controller provides. This section is pretty short. It asks you for your MCR. This is what you get from the local property value survey. Do not let your CAD tell you what goes here, because they do not know. Okay, I've had a lot of districts where their CAD thinks that they know school finance better than the CFO does and tells them what to put in here. Again, this is what you get from the local property value survey. Okay, that goes in there. The enrichment tax rate, this is tier 2 pennies. So this is what you adopted last year, essentially, minus any copper penny compression or any disaster pennies. This just is 5 cents. So what this means is you can adopt the first 5 golden pennies, first 5 pennies of tier 2, without having an election. Anything above that requires an election. Okay, so that gets added there. Then you get your total M&O rate. This is the part, Jaime, this is what we were working on the other day. This is why his CAD was bullying him, trying to get him to adopt a different INS rate. That is not what he needed. I'm going to skip over this just for a second. get your INS state aid from the template. This is EDA, IFA, and the hold harmless. Plug that in there. This comes from the assessor collector. This will be your certified 22 excess debt collections, and then your collection rate, your 23 collection rate will come from assessor collector. For those of you that are talking to your CAD or your tax office and they are telling you that your INS rate is wrong, the way I would recommend y'all proceed is to put whatever INS rate you want to adopt in line 35 and work your way backwards, okay, to put to arrive at whatever debt figure needs to go in 29A. Okay. If you need help with that, let me know. I'm happy to help. But essentially, let's say the rate you want to adopt is higher than what your CAD or your tax office say it should be. Essentially, what that means is you need to increase the debt amount here, the amount you're going to pay, and you can just do that with essentially you're saying you're going to defease, right? You're adopting a rate that's higher than what this form says you should. And so technically that's a defeasement. And so I would encourage you to have a defeasance resolution in place and then adjust that number in 29A to make sure you yield the result that you need. If the situation is reversed, right? If the rate you want to adopt is lower than the rate this form tells you to adopt and your tax office tells you to adopt, then you can just put things in 29B. This is essentially saying you're using INS fund balance instead of tax collections to pay your debt service. Okay, so districts and tax offices like to pretend that this form is written in stone and it came from on high and we have to adopt the INS rate that this form yields. I would say that's incorrect. This form is, well, let me say it the other way. An INS rate that you adopt should come from a conversation with your financial advisor, okay? It should not come from this crazy form that the controller puts out, okay? We'll make this form say whatever we need it to say to justify the rate that you need to service your debt and sort of aligns with your district's goals. That's really what all this is saying. All right.
Josh, we've got a question on Zoom.
Yeah.
It says on the TEA tax information survey for 22-23, there's a new question on line item number 6, which is requesting prorated home state exemption refunds. Can you explain the reasoning behind this?
Yeah, so that is a different item. That's not on this form. As Oscar mentioned, that's on the tax information survey. I think we presented on this in the past. I don't know the statute right now, but you get reimbursed for certain, you have to reimburse taxes paid in certain cases. I believe, Oscar, I may ask you to repeat that in a second, but I think it's for folks that have purchased their home and are getting their homestead exemption for the first time. Under previous law, you had to wait until the following year for that homestead exemption to be valid. This provision essentially, the homeowner pays the tax and then gets reimbursed for it later. Oscar, can you repeat the language on that question
Yes.
again? Make sure I'm referencing the right thing.
On the TEA tax information survey for 22-23, there is a new question on line item number 6, requesting prorated homestead exemption refunds.
Yeah, okay, I think that's right, yeah. So it just has to do with refunds that your district has paid to those that just got a homestead exemption for the first time, essentially. And that was a statutory change made last session. And so you'll need to get that information from your assessor collector. Once you get that number, you put it on the tax information survey, and then TEA will reimburse you for that. Okay, so you'll get sort of a dollar for dollar kind of reimbursement for whatever you put on that survey. Okay, if you had a disaster penny in the prior year, this is where you kind of undo that disaster penny in this section of the voter approval tax rate worksheet. This next few slides will talk about your options for your voter approval tax rate going forward. If you want to add new pennies, so this district was at 0.1383 tier 2 pennies now, they want to go up to 0.17. You have two options. You can either have an election, go to the voters on November 7th and get their approval, or if the governor declared a disaster in your county, then you can adopt what are called disaster pennies. These are temporary, right? Only last 1 year. These go forward, okay? If you are doing a TRE, that changes your timeline and it adds new requirements. We would recommend that you do what's called an efficiency audit. I don't think technically you have to do those right now because that statute gives you a 2-year window after a disaster has been declared that you don't have to do efficiency audit. And I think with the statewide freeze and all that, we're still potentially within that window. And so that technically removes that requirement. However, it's probably bad optics to go into an election with your voters, asking them for more money and not do an efficiency audit. You know, it kind of looks like maybe you're hiding something. And really the efficiency audits are not they're not difficult. It's not like someone is coming in and like auditing your books. It's more like a PEAMS book report. It's not anything terribly onerous. And so for those reasons, we recommend still doing the efficiency audit. If you're going to go for a TRE, it bumps up your tax rate adoption timeline. Instead of the end of September, it's now August 21st, 78 days before the election. If you're not going for a TRE, you have, again, until the end of September, 60 days after getting your certified roll. Once you select your auditor 4 months before the election, that's July 7th, 1 month before the election, you have to post the audit to your website and you have to discuss the results at an open meeting. At least 1 month before the election. Oh, and I forgot to update the year on that one. So that's November 7th, 23 would be the election date this year. All right, disaster pennies. They're intended to
Josh,
help
we've got
districts access.
another question.
Yeah.
The question
Go ahead.
is there any discussion about the state freezing the local homestead exemption? They're thinking about reducing theirs at their district by 5%.
There is not any discussion. That was not in the major property tax relief bills that were passed, or not passed, I'm sorry, that were discussed this session. However, they've done that in the past where I don't know if I think they allowed you to, trying to remember back. I know you couldn't fully remove your local optional homestead exemption after House Bill 3. I'm not sure if it totally prohibited you from tweaking it at all. But right now, as far as I'm aware, there's no prohibition on changing your local optional homestead exemption that was passed this session. One note is the timeline for the LOHI stuff is different. You have to do that by July. And so, and I'm not sure, I think it's the end of July, but you want to check statute and make sure that you're aware of when you have to do that, because the timeline on changing your LOHI is different than it is for tax rate adoption or budget adoption. So if you're contemplating changing that, make sure you're really firm on that deadline. And again, I think it's the end of July that you have to change that LOHI percentage. Okay. Disaster pennies help districts access additional funding to offset cost of disaster. Some districts take a pretty liberal view of that. And so, just, assess your own risks there and how you want to proceed with your interpretation of that, and sort of finding costs that are related to the disaster. Nobody really checks this. TEA is not going to audit you. State's not going to audit you on the things you're using disaster penny proceeds on. But that is, again, the intent. And if you abuse this tool, it could get taken away. So let's all be responsible users of disaster pennies. Some folks asked about the disaster declaration. These are all the counties I could find in calendar 22 that declared a disaster. I don't see Hidalgo or Cameron, the main ones. I see Webb and maybe some others around here that are on this list. Yeah, those are the ones I'm aware of. There may be others. If you think your county was declared a disaster at some point in the past year, I would reach out to your legal counsel and they can help confirm that. One quick note, some law firms will tell you it has to be in the prior calendar year. So the rate you're adopting now, the disaster had to have occurred in calendar 22. Other law firms will tell you that the disaster has to have occurred in the prior school year, right? So in the 22-23 school year. So that could go all the way to August 23. So whatever disaster you're trying to use, I can tell you which law firm you need to call because they'll give you different answers. Personally, my reading of the law is calendar year, but I'm not a lawyer and I wouldn't defend, I wouldn't be in the position to defend you if somebody took issue with that interpretation. So whatever way you want to go, just if you're contemplating disaster pennies, you need to get counsel involved. The other thing I want to mention, of course, they only last 1 year. So just be mindful of that. If you adopt them, you got to make sure to remove them the following year. All right, here's a public meeting notice. I'm going to go through this really quickly just because we've gone through a lot of it already. We already talked about proposed rate. Here's a section with the year-over-year budget increases. That's pretty straightforward. If you're a recapture district, don't include that. For M&O, include 199, and if you have Fund 101, food service fund, include that. Don't include 240 in that. That would be federal. So include 199 and 101 here. Obviously, debt service is just 599. The total would be the sum of those two. Let's see, this part your tax office probably help you with. It's found on those certified total reports that I walked through earlier. You need it for the 23 year, the current tax year, and then the 22 tax year. You'll need to plug all those in. Here's the rate to maintain stuff. We've already talked about that. There's some differences between how Moat Casey does it and how other districts do it. If you have questions, reach out and I'll be happy to hop on a Zoom and walk you through that with your template. This section, we pull the market value from those CAD reports. And you pluck a couple different other data points from those CAD reports and calculate the change in levy on your average residence. Here's an example of how this could work. So you find this average market value. This data point is usually on your CAD reports. Next, we take the average of the homestead cap. So the total homestead cap loss divided by the number of homesteads goes here. Add the state mandated homestead amount here. And so then market minus cap minus homestead gets you taxable. If you have a low HE, you need to reduce that as well. So that'd be another line here. If you have a local optional homestead, you'd remove that from your market to get to your taxable that's used here. I'm sorry, here, average taxable. All right, so that's how you get from market down to taxable. Voter approval tax rate, we talked about that already. I'm gonna move on past that. Some other odds and ends. You must designate, the board must designate an officer or employee to calculate the no new revenue rate and the voter approval tax rate. We have a sample resolution that you are free to steal from us and have your board adopt that. If you're new to the district, you don't have to do this every year. However, we recommend that if you're new or you're not sure if you've done it in the past, make sure that I would go ahead and adopt it. And again, usually we just encourage them to designate the CFO or the assistant superintendent over finance. So the highest ranking finance person at the district would be listed on there. And then once you adopt it, as long as that same person's in the position, then you don't need to do it every year. When the notice is published, you got to post your summary of proposed budget online. We talked about that already. Statute includes some specific information that has to be on that notice. Hopefully y'all are aware of those requirements already. Once you fill out those tax rate calculation forms, or your tax office fills out those forms for you or with your assistants, they need to go into this database that the appraisal district maintains. And then you have to append those worksheets to your budget. Of course, you have to adopt your budget before your tax rate. This is true if you're a July 1 or September 1. So if you're September 1, just make sure procedurally on that meeting, you're adopting your budget before your tax rate. That's required in statute. The Board of Trustees must also approve the appraisal roll. There's no hard and fast rule on what form that resolution needs to take. Happy to share some sample resolutions that we use for that purpose.